Hi, this is Drew Tignanelli, President of the Financial Consulate, and this is another market update just to give you our feel about what's happening, because a lot of people are seeing this market go higher and wondering, hey Drew, you know, things seem to be getting better. Why do you seem to be holding on to more of a negative perspective? And, you know, my position hasn't changed. We're still doing some trading plays. As you've seen, we're buying some things. We just bought Walmart about a month ago. We just bought DuPont recently, but they're strictly trading plays. We're not overtly excited long-term still. And let me explain why. Back in the 1920s, a famous investor named Bernard Baruch said this: you take the first third and you take the last third and I'll take the middle third. And what he was really saying there is that the middle third is the safe portion of an investment. There's very little risk in the middle third that you're going to go down and that you're not going to go up. Obviously, the middle third, it's the middle third. It's not going down, it's only going up. But the first third, you could be waiting a long time for that first third to take off. Or the final third, you could hang around a little too long and end up in a tsunami on the way down. But the middle third, even if he's a little too early, he's still on time. And even if he's a little too late, he's still on time. That's the beauty of the middle third. And that's kind of where I think we are right now. And in the sense that we don't feel that the risk-reward ratio in believing that a new bull market has started is at all worth betting on. Is there opportunity to make money right now? Yes, absolutely. Is it worth trying to make the money that the market's given us right now? I don't think so, and let me explain why. Let's take the unrest in the Middle East. You're going to see that type of scenario take place all throughout the world. You're going to see many governments toppled in places in the world that you might not even have expected that to ever occur. To assume that things like Egypt are for our good. There's a lot of people going around saying, oh, the Middle East is going to democracy now, just like the former Soviet bloc countries went to democracies. And this is going to be extremely bullish for America and for the world. And I'm not willing to bet on that yet. Number two, the concept that governments continue to use debt to solve debt problems. In other words, governments are borrowing money and printing money to bail the banks out, to bail this country out or that country out, etc. It's kind of like kicking the can down the road. And I'm not willing to bet that that's all over now just because the United States has printed $1 trillion or quantitative easing 2, etc., etc. I'm waiting for quantitative easing 3 and 4 before I become convinced that this is on its way. And then you also have the commodity boom, and to people to just think, oh, commodity prices are booming, this is an incredible opportunity and companies are going to make a lot of money all at the same time, doesn't necessarily make a lot of sense when you consider that companies need those commodities to make the money they're making. I think the reason you're seeing the stock market do so well right now is because there has been a lot of money printed. They have been able to stop some of the short-term problems that we've had, and so you've also had a tremendous amount of reduction in expenses in corporations by all the people that they've fired. And they're not going to hire them back anytime soon because they like the profit margins they're seeing at this moment in time, and they're also concerned that this thing can turn on a dime anytime in the future. So you take the commodity boom, and to think that that this is a new bull market in stocks is hard to understand, because there seems to be, in my understanding of market history, that there's an inverse correlation between commodity booms and stock market booms. So I'm not willing to bet that this is anything more than a cyclical bull market, which could last another month, another 6 months even, but I'm not willing to bet when the top's going to be hit. So we're taking a cautious approach. Also, the other thing that I'm very concerned about is that if you look at the money supply growth of Japan, and you look at the money supply growth of the European Union, and you even look at the money supply growth of the United States, and then you couple in with that all the emerging markets which had been trying to stimulate their economy more to help the world out of the credit crisis, all those countries are now still in a retraction of that money supply. So China's pulling back, China's raising interest rates, Brazil's raising interest rates, Russia's raising interest rates, South Korea's raising interest rates, India's raising interest rates. The European money supply is not growing very fast at this moment in time. Australia's raising interest rates. You have a lot of contraction going on in the world. To believe that the United States single-handedly is going to thrust us out of this like we have in the past, I'm not willing to bet on it. And the housing market still is not solved in any way, shape, or form. I think that you're going to continue to see foreclosures. If I just consider the amount of calls we're getting today from some of our clients, friends, or children, et cetera, who still have problems compared to what we were getting a few years ago, it's dramatically higher. I'm not willing to bet the housing problem is over also. All in all, we do agree that there's good things happening. We're just not willing to bet on the risk-reward ratio at this point in time. And my last point is, I'm still convinced that there is much more of a hammer to fall at the end of what this bear market is, as opposed to that we're just gliding now into a new bull market. I still believe there's another shoe to drop. I've got some good reasons to believe that at this point in time. I can change my mind, and I'm going to leave that door open, but at this moment in time, we're staying cautious. This is Drew Tignanelli saying God bless.